Hi, this is James Shug with Westpac London's end of day report for Wednesday, January the 18th. A lot to get through today, so I'll run through the various news events and then we'll get to the movement in markets. We had a slight fall in producer prices in the US, mainly led by food and energy prices, but the other news in the US about activity was actually pretty positive. We saw industrial production rise 0.4% in December. There was a 0.9% rise in factory output, with things like business equipment, construction supplies, machinery, autos especially strong. But a fall in utility output meant that the headline IP number was just 0.4 compared to the 0.9 for factories. So the industrial sector clearly was looking pretty solid at the end of 2011 in the US. The National Association of Home Builders reported a jump in their member sentiment to its highest level since mid-2007. So that's another sign that the US housing market's probably bottomed. Not saying it's really recovering yet. There has been some good numbers on the economy, on the housing market in the last couple of months, but it's still at a very, very low level of activity and not really making much of a contribution to the broader economic story yet. In Canada, we saw the Bank of Canada governor, when he issued his monetary policy report, expressed a bit of concern about the housing market there. He's, record household debt ratios to income, something that he thinks could potentially be a problem, and certainly the central bank there and regulators are looking at housing very closely. In Europe, we saw a rise in construction spending in November, but that followed three steep falls in the previous 3 months. So it still points to the current quarter probably being a contraction in Europe. In the UK, we had unemployment figures which showed 118,000 people out of job in the 3 months to November, about the same rise as we saw in the previous quarter. So the unemployment rate rose to 8.4%, which is the highest it's been since I think 1995. I just mentioned these numbers in particular to emphasise how the UK economy is softening, and as a contrast to Australia, where unemployment's only 5.3% at the moment on the official figures. And the other news, quite big actually, IMF. The IMF has announced a plan to raise half a trillion or up to $500 billion worth of extra lending capacity. It estimates that there could be as much as $1 trillion worth of bailout funds needed from it over the next few years. It hasn't specified where the money is going to come from. We know that European leaders are prepared to put in a bit extra, but the US certainly isn't keen, and others aren't keen. So that's certainly a story in progress. The World Bank cut their global growth forecast. In June, they were forecasting 3.6% for growth in 2012. They're now on 2.5%. They're actually forecasting a contraction of 0.3% in Europe this year. We think there'll be a 1% contraction, but it's significant that one of the big official forecasters like the World Bank has now got a negative there. Other big official forecasters like the ECB and I think the IMF have got numbers like 0.2s, 0.3s as their sort of central projections in terms of expansion. But we're now starting to see the official family forecasts shift towards contraction in Europe, which is certainly our view for this year. Greek debt restructure talks, they seem to be fired up again, and apparently we might be seeing some sort of agreement being reached. The other reports that are coming through today, there was some disappointment that looked like they'd broken down last week. So they currently got a 50% haircut agreed with the banks. They want a bigger one. So we'll be awaiting announcements on that. So that's the news for the day. In terms of markets, the movements aren't that dramatic really. We've got a 0.2% gain on the London market. The French are down 0.2%. The Germans up 0.3%. But the Italians down 0.3%. The Spaniards had a bigger loss, a 1.3% fall on the Spanish market. And the Dow's currently up 0.6% at 12,553. It's about 6:30 in London at the moment, so still a few hours to go on the US markets. In commodity markets, we've got copper prices up 0.6%, gold's up 0.25% at $1,660 an ounce, and oil down a tiny bit, 0.1% off there, at $100.58 a barrel. And the Aussie dollar, 1.04, 1.041 against the US dollar at the moment. It's been climbing a little bit, and against the euro, it's 0.81 exactly. So come down a little bit from the 0.815 record that we saw yesterday. So you need basically your 81 cents, you get 81 euro cents when you pay a dollar, an Aussie dollar. Okay, that's about it for today's numbers. Tomorrow, or today in the Australian session, we've got employment numbers coming up and unemployment. Westpac's view is we'll see a 10,000 fall in employment and a slight rise in the unemployment rate to 5.4%. We're sort of at the weaker end of the market. And there's a few other numbers on inflation and unemployment expectations coming out as well. That's it for me for the next week or two. I'm going to be travelling in South America, so unfortunately there won't be any more of these video reports, I don't think, until I get back the week after next. Okay, so bon voyage.